In this video of financial scams to avoid, I'm talking about the gone to a dealer scam in Forex. Stay tuned. Hey traders, a very warm welcome to you. So, the gone to dealer scam, what is it? Let me explain how it works, what it is, how we can avoid it. All right, so the gone to dealer scam is this. Generally speaking, when we're trading, especially online, we're going to open up our platform, we're going to open up our ticket, we're going to put through a buy order or a sell order. And pretty much instantly that's going to come back and say, hey, you've been filled or not, as the case may be. And we do it to stops, we can do limits with market orders, whatever. Now, I understand that brokers will send most orders through automatic fill if you're trading a reasonably small size, for example, on a very common pair like Euro US dollar JPY, GBP USD, smallish size or relatively small size, you're going to get instant fills. You're going to be able to get in and out as much as you want, as quick as you want, because it's all automated. But I get from a kind of dealer or broker's perspective, if you start doing bigger size than is outside normal, they might want to check it. So what will happen is instead of it being automated, it goes through to a dealer who's sitting at a dealing desk. He gets an alert up and it says, Trader A wants to buy £2,000 a point if we're spread betting on Euro US dollar or whatever it may be. Or maybe it's a large size and an exotic pair as well. So if it's unusual and they don't have much liquidity in it, maybe it goes to a dealer. If it's large in size, maybe it goes to a dealer as well. I get that. That's a commercial decision. They want to kind of, make sure they're not, make sure and give the best possible price, and they might want to have to deal with it manually if it's a bigger size. Understandable. However, the gone to dealer scam is different. It's not to be confused with traders going to a dealer. There's a little bit of difference to it. So what happens with the gone to dealer scam is you're trading a kind of instrument that normally everyone else is getting instant fill on. So Euro US dollar JPY, GBP USD, whatever it may be, and you're taking a trade and you're trading relatively small, moderate size that normally is quite easily accommodated in this market. The gone to dealer scam works like this. You decide that you want to go long here, let's call it 15.6, whatever it may be, and you click the buy button. You've put your order size in, your ticket size, you go through, click the buy button, and now there's something that basically changes the color of this ticket, or it goes into a timer or whatever. It basically holds the ticket and goes to a dealer. So the dealer then sits there and looks at it, and he either sends it back, let's say he sends back a green for a fill, a red for not filled. So it either comes back, yes, you've been filled, and you get a green light and you get filled at 15.6, or it comes back, no, you haven't been filled and it's red. Maybe I should just color it red to be sensible. Comes back red and you haven't been filled and you've got no position. You've got to make your order, put your order through again. Okay, fine. We get that under big size or unusual conditions or fast markets as well. We get that. We know that when they're exposed to stuff, they have to regulate what they're doing. It can be frustrating for us, but we understand it. Fast market conditions sometimes have to be a dealer intervention. I get that. Right, this is a little bit different. So what happens now is you put a buy order in at 15.6 and the market chugs on. It goes higher and higher. Let's use a blue pen. I'm going to assume this is the blue point here, by the way, guys, is after you've placed that order through. This is what happens after you place the order. So the market then goes up 15.7, 8, 9, 10, 11, 12. The dealer sees that, waits for that, realizes you're in profit, gives you the red. Comes back and you've got red, no fill, no fill. You're not in that long trade at 15.6. Okay, the next scenario happens. You place the order and immediately the market goes down for whatever reason. It's not a big deal. Your stop is lower, it goes 15.6, 5, 4, 3, maybe it goes down to 15. All of a sudden, the dealer comes back and says, yeah, you're in now. You're long at 15.6. So in other words, that dealer or that broker, that unscrupulous guy at the other end is basically saying, giving themselves a window of time to either let you into the trade if you're losing, or take you out, or not let you into the trade if you're winning. So by giving themselves that window, they give themselves that much extra spread effectively on the trade. If that goes down to 15, they give themselves an extra 6 pips or saving themselves 6 pips, because you put it through again, you'll have to get even lower and lower and lower. If it's going up, they're saving themselves 6 pips or whatever, 7 pips, 8 pips, 9 pips, however many it may be. And so they're either saving themselves money by making you lose money. So you can't win the situation. If the market goes in your direction, you won't get into the trade. If the market goes against you, yes, you'll be in the trade, and they don't mind anyway because they've already basically made more on that. Now, you may want to be in the trade anyway. And of course, this is probably more for shorter term traders than swing traders. You kind of don't really mind. But if you don't mind getting in and it going against you, but you do mind if you're trying to get in, you made a decision, done the decision-making process, done the filters, pulled the trigger, hit the button, market and carries on and on and on, and it comes back and you're not filled. You missed the whole thing, it doesn't work out. So, you know, watch out for this one, guys. It's unscrupulous brokers generally that will do this. They'll mess around with this game. They'll play around with the tickets. They will you know, not let you into a trade or out of a trade. You know, even worse, if you're trying to get out of a trade using a market order. Just general good advice for trading is to use a reputable broker that is unlikely to do this, because they've got a lot of financial backing, they've got a reputation there, they're regulated, they've got a lot of clients, and there's no real reason to do this unless, as I say, certain conditions that they say they can't really give you instant. It feels like you're trading big size, fast markets, unusual, illiquid markets, etc. Understandable. But normal market conditions, if they're playing this game, switch your broker. All right, guys, see you in the next one. Take care. Bye-bye.